As you know, BlackRock is going after a Bitcoin ETF. Surprise. Newsflash, right? But we cannot trust BlackRock. BlackRock is not here for the Bitcoin revolution. BlackRock's not even necessarily just here to make a buck. You see, if they were just here to make a buck, yeah, okay, sweet. Everyone's here to make a buck, man. I get it. I think it's a lot more problematic than that. It's a lot more nefarious than that. Because you have to remember, BlackRock's tentacles stretch far and wide. Their control over the media, their control over what people see and think and hear is unprecedented, along with Vanguard and State Street and stuff like this. The influence of these companies is truly unbelievable. And they use that influence. They're not passive investors in these companies. They don't just go out and buy some stocks in whatever company and then say, that's fine, we'll just sit on that and chill and collect some dividends. No. They are involved. They make phone calls. They put pressure. They push agendas. And while Larry Fink is kind of backing away to an extent from the whole ESG thing, because he thinks the terms may have been a bit co-opted or whatever, the term doesn't matter. The reality is that BlackRock and associates will continue pushing certain agendas forward. And these companies have enough money, enough financial backing to do almost anything. Now, we've covered the numbers at great length here on the channel. Basically, the moon math for BlackRock and Fidelity and Invesco and all these other big guys getting into the Bitcoin game is pretty damn insane. Was it like 0.3% of BlackRock's assets would buy every single Bitcoin currently listed on centralized exchanges? It's pretty substantial if you ask me. And so you have to wonder, what is the end game here for BlackRock? Oh, sure, they want to make a buck. I get it. But is it deeper than that? Is there more going on here? I think that there is. I think we cannot trust BlackRock as far as we can throw them. They're pretty damn big, so you can't really throw them very far. As Mr. Crypto points out here, so the latest Bitcoin crash was created by BlackRock. Speculation, obviously. Hard to say if BlackRock's back there pulling the strings, right? But it is interesting that Larry Fink came out and basically, on TV was saying Bitcoin's the future of money, Bitcoin's awesome, yada, 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 right at the local top. And of course, as we've covered here before, BlackRock's influence in the media, as soon as BlackRock announced a Bitcoin ETF, what did you start seeing happen in the media? You started seeing basically about face. Oh, suddenly Bitcoin's good for the climate. Suddenly Bitcoin is great for empowering people and fighting racism and saving puppies and all this kind of stuff. That's the power of a phone call from BlackRock. They don't want anybody crapping all over their new ETF products. Mr. Crypto goes on to say, we're already aware that major institutions have been showing interest in Bitcoin, especially with recent filings of spot Bitcoin ETFs. It's hard to believe such events are coincidental in financial markets where trillions are at stake. Recall the time when Wall Street Journal showed significant fear in the market around its local peak. The end of the spot Bitcoin ETFs were likely to be denied. Yet just half an hour later, documents revealed the SEC simply sought further clarity. A very vague article from the Wall Street Journal it was, supposedly to create fear in the market. It's notable that the Wall Street Journal is majorly owned by BlackRock and Fidelity. Interestingly, both parties expressed interest in a spot Bitcoin ETF. Why would they buy Bitcoin at its local peak to back their spot Bitcoin ETF? Doesn't make sense. They want it cheaper. A more plausible strategy would be to depress the prices by stirring up fear through the news corporations that they already own. And when the Bitcoin prices appeared weak, another ambiguous article from the Wall Street Journal emerged, suggesting that SpaceX had allegedly sold all their Bitcoin holdings. Now, it's interesting because he's pointing out some things that we already kind of know. But the reality here is that these organizations manipulate the media to manipulate the narrative, to manipulate your mind, to get you to either buy or sell. That's not hyperbole. That's not me stretching the truth. It's well documented that organizations like JP Morgan, Goldman Sachs, all the big asset managers, they manipulate markets, they manipulate prices, they plant articles, they control narratives, they buy politicians, they buy governments. Incredibly powerful organizations that are not our friends. They're not here for us. No, they never have been, never will be. It's very problematic. Now, before we get into some other realities around the Bitcoin ETF, just a reminder, of course, that if you are not yet signed up to the Wealth Mastery newsletter, you got to get signed up. It is the best newsletter in crypto, bar none, the best alpha, the most information, the best news updates. We talk about DeFi and NFTs and altcoin reviews and much, much more. All for the low, low price of free. So check it out. You can go to the link in the description or the wealthmastery.io. That is the wealthmastery.io and get signed up. 275,000 weekly readers getting alpha straight to your inbox. Now, as Crypto Hoem points out here, here's scenarios for a Bitcoin ETF approval. ETF's approved, markets go nuts. Go max long as soon as the news breaks. ETF is delayed. Market kind of stagnates, goes a bit lower, probably have better buying opportunities. ETFs get definitively denied, not delayed, but denied. Markets tank. Say a prayer. Say goodnight. And remember, it's always darkest before the dawn. I'm Batman. It's interesting too. Approval, delay, denial, probably delays until we get an approval would be my guess, to be honest, for what we're going to see happening here for Bitcoin ETFs. My guess is that we could even see it delayed until the absolute last minute, which would be March next year. Maybe we get it sooner. Maybe, depending on that grayscale case, how that plays out. But I still think that the arrival of these mega institutions to Bitcoin is very problematic for the long-term health of Bitcoin. Because right now, you got about 70% of Bitcoin in the hands of, should we say, the diamond handers. People who have no intention of selling. They've exited fiat. It's a staggering number. Staggering number. Yeah, some of that money will be tempted out at much higher prices. But let's say 70% of that's there. Let's say some Bitcoin finally gets over on the Lightning Network, so it's not paying fees to miners. And then let's say we get 1 out of 5 Bitcoin in the hands of these mega institutions wrapped up in Bitcoin ETFs. When they go into those wallets and they're custodied by BlackRock and others, that Bitcoin's no longer transacting on chain, which means that miners aren't receiving fees from transaction fees. They're solely reliant on block rewards. By 2032, the block reward for Bitcoin is going to be 0.75 BTC per block. Now, the price of Bitcoin better be $1 million by then. Otherwise, Bitcoin miners could be in trouble because they're not going to be getting much in the way of transaction fees at that point. Of course, if Bitcoin's $1 million per coin, transaction fees are probably not going to be super cheap either. So a lot of that activity, again, will be financially incentivized to go to layer 2. Which, again, has a circular effect of being problematic for the long-term security health of the network. It's thoughts to think about. And I'm sure Bitcoin miners are going to figure it out. We'll be okay. But I don't trust them in the least damn bit. Also, this is an interesting news story. Mysterious wallet becomes the 3rd largest holder of Bitcoin in just over 3 months, accruing 118,000 BTC worth $3 billion, on par almost anyway with MicroStrategy. Now, a lot of people are saying, hey, come on, it's probably just Gemini. Maybe it's the Gemini that transferred over to their new wallet. We haven't got confirmation from Gemini yet, but the one thing that I would say is that regardless of who that wallet is, obviously a lot of speculation that is the Blackrock wallet. If so, they made a nice entry into the market. But if it isn't the Blackrock wallet, understand the Blackrock hasn't even started significant buys yet, or if they have, they're doing it very quietly in the background somehow. Now, Blackrock has had a private Bitcoin fund open for a while. They opened that up basically right at the bottom of the bear market. Good timing, of course. And then they launch a Bitcoin ETF 6 or 8 months later. Well played, Blackrock. Well played. But Blackrock will be buying. Whether it's that address or it ends up being the Gemini address is kind of irrelevant because BlackRock money will enter the game. BlackRock money will pump our bags. And it's a deal with the devil because BlackRock, they're not good guys. They're not good guys. These guys are not here for anything other than for BlackRock, which is fair enough. They're allowed to do that. But let's not get it mixed up. They will pump our bags. They will pump our bags like crazy, potentially. But they will also manipulate markets. The entry of these players into markets is a real double-edged sword. So I think that's something that's very important for us to keep in mind here as cryptocurrency investors as we see these mega institutions coming into the game.